You can't make a good deal with a bad person. Good big decisions do not take time at all. If they do, you are in trouble. Risk comes from not knowing what you're doing. Everybody's got a different circle of competence. The important thing is not how big the circle is. The important thing is staying inside the circle. Ignore the stock market, ignore the economy, and buy a business you understand. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Sound investing can make you very wealthy if you're not in too big a hurry. Much success can be attributed to inactivity. Most investors cannot resist the temptation to constantly buy and sell. The most common cause of low prices is pessimism, sometimes pervasive, sometimes specific to a company or industry. We want to do business in such an environment, not because we like pessimism, but because we like the prices it produces. It's optimism that is the enemy of the rational buyer. Whether we're talking about socks or stocks, I like buying quality merchandise when it is marked down. The value of a business is the cash it's going to produce in the future. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. Very successful people say no to almost everything. I think the worst mistake you can make in stocks is to buy or sell based on current headlines. Never be afraid to ask for too much when selling or offer too little when buying. If you're an investor, you're looking on what the asset is going to do. If you're a speculator, you're commonly focusing on what the price of the object is going to do, and that's not our game. Our goal is to find an outstanding business at a sensible price, not a mediocre business at a bargain price. When investing, pessimism is your friend, euphoria the enemy. Asset-heavy businesses generally earn low rates of return, rates that often barely provide enough capital to fund the inflationary needs of the existing business, with nothing left over for real growth, for distribution to owners, or for acquisition of new businesses. If you've got the power to raise prices without losing business to a competitor, you've got a very good business. And if you have to have a prayer session before raising the price by 1/10 of a cent, then you've got a terrible business. I've been in both, and I know the difference. The best investment you can make is an investment in yourself. The more you learn, the more you'll earn. The best thing that happens to us is when a great company gets into temporary trouble, we want to buy them when they are on the operating table. As an investor with small capital, one should prefer businesses that have high returns on capital and that require little incremental investment to grow. You'd get very rich if you thought of yourself as having a card with only 20 punches in a lifetime, and every financial decision used up one punch. You'd resist the temptation to dabble. You'd make more good decisions, and you'd make more big decisions. Our approach is very much profiting from lack of change rather than from change. With Wrigley chewing gum, it's the lack of change that appeals to me. I don't think it is going to be hurt by the internet. That's the kind of business I like.